Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gold River Productions, Inc. quarterly report. Gold River Productions, Inc. trades at a lower price-to-book ratio of 0.15 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. Gold River Productions, Inc. offers a range of businesses and services that cater to the seafood industry. At its core, the company is involved in the production of shrimps, which are sourced from both Ecuador and the United States. This indicates that Gold River has established partnerships with suppliers or farms in these regions to meet their production needs. The company's primary focus on shrimp production suggests a specialization in this area, allowing them to develop expertise and economies of scale. By producing shrimps, Gold River is able to offer a consistent supply of high-quality seafood products to its customers. This business model enables the company to tap into the growing demand for sustainable and responsibly sourced seafood. In addition to shrimp production, Gold River's involvement in the sale of shrimps implies that they have established distribution channels and marketing networks to reach their target audience. The company's presence in both Ecuador and the United States suggests a global outlook, allowing them to cater to diverse customer needs and preferences. Overall, Gold River Productions, Inc.'s business operations revolve around the production and sale of shrimps, positioning the company as a key player in the seafood industry. The stock price of Transamerican Aquaculture, Inc. has increased by over 20% in the past year, but a closer look at the company's financial reports and news reveals a different story. Despite the significant increase in stock value, the company has been facing numerous challenges that have put its financial stability at risk. One of the main issues is the continued operating losses and zero revenue reported by the company for the quarter ended September 30, 2025. This is not an isolated incident, as the first 9 months of 2025 also saw a significant decrease in revenue compared to the previous year. The company's financial position has been strained, with current liabilities exceeding $4.7 million against current assets of just $340,123. The company's history of bankruptcy and its current liquidity stress have raised concerns among analysts. In fact, a distressed microcap and credit risk analyst provided a negative assessment on January 14, 2026, highlighting the severe liquidity stress, lack of revenue, and heavy reliance on high-cost capital. The company's decision to focus on maintaining broodstock for future genetic development rather than producing or harvesting shrimp has also raised questions about its ability to generate revenue. Given these challenges, it is surprising that the stock price has increased by over 20% in the past year. However, without any reported news events that could have caused this increase, it remains unclear what factors contributed to the rise in stock value. The financial health of a company can be gauged by its ability to generate positive operating cash flow. However, our analysis reveals that this particular company is struggling with negative operating cash flow. The data from the financial statements confirms this trend, showing a net outflow of cash from operations in both the 3 months and 9 months periods ended September 30, 2025. This negative operating cash flow indicates that the company's expenses are exceeding its revenues, resulting in a depletion of its cash reserves. As a result, the company is not generating sufficient funds to meet its operational needs, which can be a cause for concern for investors and stakeholders. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, accrued interest expense saw a substantial increase from $114,568 to $900,187, indicating a notable rise in debt-related costs. However, when examining interest expenses specifically, we see a contrasting trend. In 2024, interest expenses were $175,836, but by 2025, this figure had decreased by 49% to $87,590. Furthermore, the company's interest expenses also dropped from $449,356 in 2024 to $215,528 in 2025, a decrease of $233,828. These fluctuations suggest that while the company's debt level has increased, its interest expenses have actually decreased over time. Management's outlook for the company is focused on strategic growth and investment. The company plans to utilize proceeds from puts for general corporate purposes, working capital, and potential acquisitions or investments. This suggests that management is looking to expand the business through strategic initiatives. The seasonal nature of shrimp farming presents challenges, with varying cycles and harvests affecting the company's prospects. However, management is taking proactive steps by planning to refresh broodstock lines in 1Q26, contingent on securing investment funds. The success of the business is heavily dependent on shrimp prices and demand, which poses a risk if prices decline. To mitigate these risks, management plans to allocate working capital for development and production. Additionally, new positions will be added for corporate development and operations once additional capital is obtained. This indicates that management is committed to investing in the company's growth and infrastructure to drive future success. GHS made several significant transactions through acquisitions and divestitures. In terms of acquisitions, the company purchased 44 shares of preferred stock for a total of $44,000. Additionally, GHS acquired 19 shares of Series D preferred stock for $19,000 per share, totaling $36,100. Furthermore, the company obtained warrants to purchase 71,250,000 shares of common stock at an exercise price of $0.345 per share. On the other hand, GHS engaged in several divestitures. One notable transaction was a deed in lieu, DIL, of foreclosure on December 2, 2024, as recorded on page 13. The company also sold 63 shares of Series D preferred stock for $60,000, as mentioned on page 18. Concerns about inventory buildup and supply chain disruption. The recent data highlights a significant increase in inventory levels across various categories. Notably, the total held for sale inventory has seen a staggering 23.34% rise, indicating an unprecedented accumulation of stock. This surge is further exacerbated by a substantial increase in broodstock, restocking from $210,000 to $54,869. The sheer magnitude of this growth raises concerns about potential inventory buildup and its implications on the supply chain. The 338,898 unit increase in inventory between 2024 and 2025 suggests that companies may be struggling to manage their stock levels effectively. This could lead to inefficiencies, wasted resources, and ultimately, a disruption in the supply chain. The data points to an urgent need for companies to reassess their inventory management strategies and explore ways to optimize their stock levels. By doing so, they can mitigate the risks associated with inventory buildup and ensure a smoother operation of their supply chains. That concludes the financial summary for Gold River Productions, Inc. Feel free to comment below, and I will be happy to answer them when possible.